Accounting cycle. Accounting cycle is a sequence of steps involved in the accounting process. Accounting cycle starts with the identification and recording of financial transactions of an organization and ends with the preparation of final accounts for the accounting year. The cycle continues for the next accounting year with the opening balances of assets and liabilities, which are the closing balances of the preceding year. The steps involved are: first, identifying the transactions and journalizing; next, posting and balancing; then, preparation of trial balance, preparation of trading account, preparation of profit and loss account, preparation of balance sheet. Identifying the transactions and journalizing. The first step in the accounting process is identifying the financial transactions of a business. All the monetary transactions are recorded in the books of original entry called journals. Recording the transactions in the journals is called journalizing. Entries are made in the journals on the basis of source of documents in the chronological order, that is, the order of occurrence of the transaction. Next, posting and balancing. Transferring the entries from the journal to the ledger is called posting. In the ledger, entries are made in each account after classifying them under common heads. Finding the difference between the total of the debit column and credit column of all the ledger accounts is called balancing. Next, preparation of trial balance. The list of ledger balances, namely trial balance, is prepared as the next step. On the basis of ledger balances, the financial statements are prepared. Preparation of trading account. Next step is preparation of trading account for a particular accounting period. All the direct revenues and direct expenses are transferred to trading account. The balance in the trading account is the gross profit or gross loss. Preparation of profit and loss account. Profit and loss account is prepared next for a particular accounting period. All the indirect revenues and indirect expenses along with gross profit or gross loss are transferred to profit and loss account. The balance in the profit and loss account is the net profit or net loss. Last step, preparation of balance sheet. A statement showing the balances of assets and liabilities, namely balance sheet, is prepared as the final step in the accounting process. It is prepared on a particular date, normally on the last day of the accounting period. The closing balances of an accounting year are taken as the opening balances for the next accounting year. The transactions identified and recorded for the next year are followed by posting and other steps. The results are communicated to the users of accounting information for the purpose of analysis and decision making. Basis of accounting. There are three bases of accounting in common usage. First one, cash basis. Second one, accrual or mercantile basis. Third one, mixed or hybrid basis. Shall we see? First, cash basis. Under cash basis of accounting, actual cash receipts and actual cash payments are recorded. In this basis, revenue is recognized when cash is received and expenses are recognized when cash is paid. Credit transactions are not recorded till cash is actually received or paid. Under this basis, any income received, any expenditure paid, any asset purchased for which cash is paid, any liability paid during the accounting period, whether related to the past, present, or future, is taken into account. Accrual or mercantile basis. Under accrual basis of accounting, the revenue, whether received or not, but has been earned or accrued during the accounting period, and expenses incurred whether paid or not are recorded. Under this basis, any income earned whether received or not, any expenditure incurred whether paid or not, any asset purchased whether cash is paid or not, any liability incurred whether paid or not during the accounting period is recorded. Hybrid or mixed basis. This basis is a combination of cash basis and accrual basis of accounting. Under mixed basis of accounting, both cash basis and accrual basis are followed. Revenues and assets are generally recorded on cash basis, whereas expenses and liabilities are generally taken on accrual basis. Role of an accountant. An accountant with his education, training, analytical mind, and experience is best qualified to provide multiple need based services to the ever growing society. The accountants of today can do full justice not only to matters relating to taxation, costing, management accounting, financial layout, company legislation, and procedures, but they can delve deep into their fields relating to financial policies, budgetary policies, and even economic principles. The area of activities which can be undertaken by the accountants is not limited, but it can also cover many additional facets. An accountant plays several roles in an organization. First, record keeper. The accountant maintains a systematic record of financial transactions. He also prepares the financial statements and other financial reports. Provider of information to the management. The accountant assists the management by providing financial information required for decision making and for exercising control. Protector of business assets. The accountant maintains records of assets owned by the business, which enables the management to protect and exercise control over these assets. He advises the management about insurance of various assets and the maintenance of the same. Financial advisor. The accountant analyzes financial information and advises the business managers regarding investment opportunities, strategies for cost savings, capital budgeting, provision for future growth and development, expansion of enterprise, etc. Tax manager. The accountant ensures that tax returns are prepared and filed correctly on time and payment of tax is made on time. The accountant can advise the managers regarding tax management, reducing tax burden, availing tax exemptions, etc. Public Relation Officer. The accountant provides accounting information to various interested users for analysis as per their requirements.